Let's talk now about solving payroll tax issues. What's the easiest way to get a loan? Don't pay 40% of your payroll. Happened a lot in 2008, 9, 10, 11, so in that area when banks weren't lending at all. So businesses, companies didn't want to lay people off, and when they did, it was too late, and they were stretched to the limit, and they're always waiting for the loan from grandma, which didn't come. They're waiting for the receivable to be collected from the big customer who went bankrupt, and they would catch up and pay those payroll taxes next week or next month. You know what that story looks like. So the bottom line is companies with cash flow issues sometimes borrow from the payroll tax liability from their employees withholding instead of sending it to the government. And when they get caught up to this trust fund comes back to haunt them. Why? Because they're non-dischargeable debt. They're not dischargeable in bankruptcy. And because they are personally liable, even if they're a corp, if they're the responsible person. The responsible person can come in many shapes and forms. More on that in a moment. So we can do an offer in compromise to request that less on these payroll taxes, and the IRS has the authority to do that. Let's take a look at what payroll taxes look like. They consist of 4 or 5 portions, depending on how you look at it. We have the trust fund portion of the liability. That's the amount you withheld from people's pay. We have the non-trust fund portion of the liability. That's the matching share of Social Security and Medicare. If you don't pay them on time, we have the interest and we have penalties. We also have the interest on the penalties, but we're just going to call it interest and penalties. That's why I say 5. So trust fund, non-trust fund, interest and penalties. If the liability is 2 or 3 years old, by the time it hits your desk, rule of thumb, you can figure somewhere around 50% is trust fund, and the other 50% is non-trust interest and penalties. And if I'm a little off, it's close enough for a conversation with the client. The trust fund recovery penalty is going to be assessed against the responsible person. The IRS is going to go after the company, and anyone in the company they feel is the responsible person, the person who failed to remit the trust fund portion of the payroll tax liability. How do they determine it? Remember the grandma story? They do what we call a 4180 interview. I don't know if the IRS website now has the form 4180 on it. Last I checked, they didn't. If you want one, go to taxresolutioninstitute.org. Go to our forms library and check out a 4180. They're pretty simple. Who did it? How did you do it? Who is responsible for the payroll? Who's responsible for depositing the payroll taxes? Did you use a payroll service? Why did you do it? Who paid the expenses after the fact? Once you knew the payroll tax, you owed payroll taxes. Did you pay the rent? Did you pay the vendors? Pretty easy to become a responsible person. By the way, between the preparation for the 4180 interview, the 4180 interview, and the follow-up to the 4180 interview for each person, you're probably looking at a fee of about $5,000 per potential responsible person. If you have 2 or 3 or 4 people that are owners or that even sign on the bank account, and I want to tell you that it will be the best $5,000 that any of them ever spent, because it only gets more expensive if the person is assessed the trust fund portion of the liability. So of that $500,000, we said rule of thumb, $250,000 is trust fund. That's how much the personal liability, the responsible person, will be expected to pay if the company does not pay it. The revenue officer, remember revenue officers are collectors, at the time they do an installment agreement for the corporation, if they grant one, will assess the responsible persons. We have a full day course that covers all of these things. If you want not to kill their credit, your client's credit, you need to know what status 63 is. We don't have time to talk about that today. So who's ever responsible is going to be assessed. If the company doesn't pay, they'll have to pay. Sometimes the IRS wants it from both, a payment from the company and a payment from the responsible person. One of those darn polling questions.